Welcome to the Twomey Stock Market Report. Today is Monday, the 23rd of May, and I'm James Twomey. I had sent out or posted a video this morning before the market on some stock buys for the Twomey Report. And if you didn't see that, we are going to take a quick look at those. And also we're going to discuss some others that should be in play or possibly in play. And then a quick synopsis of our indexes and the dynamics of what's playing out in the market today and how or where it should affect our trading. So the first thing is in our Twomey investment process is to identify the trend, look at the macroeconomics, look at the environmental factors, what's happening in play. And one that's surfaced recently is this monkeypox. That's more of a short-term influencer, but it could have longer-term implications. So that's something that came into some of the decisions on what to trade. So as I told you in previous segments, we've always looked at the sector analysis. I take a look at that during the day, usually before the market. And if I don't get a chance to catch it, I'll check it at some point. But I look at specifically what's the last 5 days performance, what's been up or down, and then the year to date or 6 months, either or. Since we're right at that 6-month inflection point, I tend to, treat those both as the same. But with that said, we know the 6-month performance on the materials has been up 4.1%, 4.7% for utilities. Financial is down -9%. And energy up 38, which we certainly know, and then healthcare -1.9. There's really nothing major positive except for maybe consumer staples down below -4. The reason why this is a little bit out of order on the 6-month, if you take a look in the last 5 days, materials have pulled up to the higher performer at 4.4% increase, utilities second, financials third, energy fourth. And we've certainly seen that as energy is sold off. And then interesting enough, healthcare is making its presence known. And why is all that? Short term, what's going to happen when recessionary times take place? And if you've heard or watched the news, nobody was really talking about a stock market's breakdown, but now that we've hit pretty much bear market territory in all the indices except for the Dow and the SPY officially, if you will, everybody's coming out and talking about recession, potential recession. And now you'll start hearing also, have we had capitulation and have met the bottom? So with that said, things that are strong in recessionary times, materials, hard assets, utilities. Interestingly enough, as interest rates yields rise, in other words, the Fed's going to raise their rates, bonds are going to pay higher monthly dividend, right, as they raise. Usually utilities do not rise, but this case in point, it's been a safe haven because I still don't think people are convinced that the rates are going to be at this low level, and if they buy now, it's not good enough, and they could have got if they wait a month or 2 or 3, they got a better rate on their bonds. Financials, I'm always skeptical of financials. I think right now we're hearing a lot of banks coming out and say things are, especially the institutions like JP Morgan and Bank of America, things are shaky. They know they're going to have to, deal with the rising interest rates. They also have portfolios that are sensitive to interest rates, and they also have mortgages that they've issued and other things, and they also have trading desks. Energy, of course, we know has been up, but that's been slightly less aggressive as it has been for the years, taking a cooler breather. And healthcare is starting to reach higher points. Industrials and information technology is also starting to rise a little bit. But that tells us if we're going to invest in anything, we should take those areas of primary interest because there should be a trend, howbeit it could be short or long. Those stocks or indexes are showing signs of positive return. So so now I know that. I put all these into the hopper. Environmental, like I said, I've got a whole list of newsflash. I'm not going to go into it here. Quotes from economists, bankers, financial experts that are saying recession is most likely going to happen. It's imminent, 6 to 12 months. The Fed is still way behind, and then bond yields need to rise. And one of the major bond, they used to run PIMCO, L. Ephraim, he's saying guaranteed stagflation, never mind if recession doesn't come through. And stagflation, what does that mean? Rising cost and low economic growth. So what happens is it costs you more for everything, and your pay doesn't go up, and the economy doesn't grow on top of that. So things just either stay flat or get worse. And if they get worse than what we are now, it's pretty bad. I mean, we've said this over and over again. I think, like I said, I was paying $3.95 for gas a few weeks ago. Now it's up to $4.60 and $4.79, the two places that I buy it. I went to the grocery store over the weekend, and I was just shocked. I mean, there's some things that are not even there, and stuff that I was buying a few weeks ago is now even up more. Of course, we are getting into summer and holiday week, so expecting a little bit of overpayment. So let's get into our recommendations. So if you had seen my alert this morning on YouTube, I said buy USB. USB is a financial asset management, investment banking, USB. I'm sure you've seen it, advertised. But anyways, the net of it is, I bought at 18.2. It's been up. It was up 3.6 over last close today. The 10 EME crossed above the 15, and it's above the 50 and 200 EMA, which would also add support. And it's in one of our rising sectors, financial. So let's take a look at UBS real quick. This is a daily chart. Each bar represents a day, and the blue line is the 200, the red line is the 50 EMA, exponential moving average. It takes the last 200 days or 50 days, smooths out the data so you create a line versus an up and down jagged chart. Much easier to read, and then you can use it as an inflection point. In my case, I use 50. A lot of people will trade off the 50. If you cross above the 50, you buy, whether it's indexes or ETFs or what have you, or the stock. If it goes below, you sell. The 200, we've had a couple previous, you can go, I think, one or two or three earliest segments in the beginning. We talked about the 200 EMA. We made some choices in the downtrend that just didn't hold as support. So this particular stock, UBS, is above both the 50 and the 200, which is good. The 50 is above the 200, but it is pretty close. The death cross happens. What does that mean? Death cross means tendency is for whatever you're looking at is to continue in a downward trend. That's when the 50 crosses below the 200. It's getting close. So, there is a little bit of concern here. The 10 EMA crossed above the 15 EMA. That's our all-in signal. I don't initially start all in. I do a starter position. If you want to invest in 10 stocks and have $10,000 to play with, 500 to 750 to start, or 1,000, whatever you feel more comfortable. But depending how many baskets of stocks, I tend to run quite a high number between indexes, stocks. Now, I'm not talking about mutual funds. I'm just talking about active trading. But for most people, they try to keep it within 10 or so. But don't let me be the guy there. So since that crossed above, that's a positive. All our other indicators are positive. The MACD is today finally in almost positive territory. The green is above the red, indicating a positive increase. And of course, the faster oscillator crossed well below here at 21. And then you want to be over 70 or 75 for that. And we certainly are there, and we're maintaining that. That's a good sign. Relative strength index means is it overbought, oversold? It's at a healthy 60, little high. You get into 70, you could have a pullback. And matter of fact, this last pullback, it was at 63.4. So we got an eye on that. This could be short-lived. And in a market like this where we know the trend is down, it's hard to buy stocks that are going to go up and stay going up for some time unless it's in our really hot sectors which had been, energy for the most part, the only one. Financial is starting to raise its eyebrows. Let's jump in it based on this criteria. But we're going to be careful. Put your stop. I'd have my stop, fairly tight, and in this case, I'd probably put it at 17 to 17.2. And then I would add to this if as this stock gets healthier. Short term. Now, what's a 60-minute chart? 60-minute chart. Each bar represents 60 minutes of the stock market during the day, right? So in a trading day, there's, 4 or 5 60-minute segments. And this goes back, several days, obviously. I go back, many days. But what I'm trying to follow is in a shorter time frame during the day, was there pressure to sell during the day? Anytime it had a bump, did it sell off? In this case, it's been an uptrend. Crossed over positive on the 10 and 15, and certainly our fast and slow stochastic and MACD, great shape. It's flattening out a little bit, and the relative strength index is 72, definitely overbought. Caution. The 120, the relative strength index, 72, a little overbought, but everything else is in a positive time frame, has been for some time. Here's another example. If you want to trade the 120, and if you're in front of it, what is it, a 120? It breaks up the stock market. Instead of each candle being one full day, it's 120 minutes of the stock day. This one goes back, again, you go back weeks if you want to. I just look a snapshot in the last 4 or 5 days, and it's been an uptrend. Perfect. It's above our 200, our cross 10 and 15. Perfect down here. Now, if you're at your computer, you can kind of watch it during the day. 120 is a great thing to trade. You go in here, you see a cross, you take your buy, you put your stop in somewhere down below here. So in this case, you would have bought at 16.75, 16.8. Probably you would have waited for that to confirm. So 16.9, you put your stop in down here. I would probably go all the way down there to 16.4. Give it some room. And just watch it ride, and you would have been a couple of points. You got to be careful for false signals. That's why I say you got to be near your computer. Getting to that, false signals. When these first cross over, you can have some sideways conditions or some false starts where it might stop. You might get stopped out, and you would want to buy in again. It's just the nature of the beast. It's not perfect. The stock market is very flexible. We do know there's a downtrend. There should be an impact. If the market takes a big nosedive, all stocks will get hit, as we saw in the past couple of weeks. But for now, and I'll talk about that shortly about the uptrend and downtrend. What else was on our list? I also recommended Novartis. Novartis is a healthcare. Part of what, 2 things. This monkeypox thing, I just saw something comes out about a drug that was going into human trials that actually helps fight cancer, and it actually in animals reduce tumors, active tumors, and they're actually injecting this into people with very active tumors, and showing some promise. But this monkeypox, it's a big flash out there. I don't even know if there's, but anyways, drug companies are going to now, everybody's going to want to have their fingers in drug companies. So Novartis, that's what I looked at. It met our criteria. And what I like about Novartis is it's a well-known company. It's got good volume, and it's crossed above its 9 and 14. So we're in play. It's above the 200 and it's above the 50. So if we look at this, we put our stop down here at 16.9. I got in at, I bought a couple of times, so it averaged out at 90.2. Oh, excuse me, I'm in the wrong stock, 90.27. NVS, here we go. But it's the same picture, right? It's above the 50, it's above the 200. I got it in 90.2, so I would suggest getting in this one, and I'd put your stop right there at the 200 EMA, which is 87. So if you get in at 90 and you can get 3-point cushion, that's great. So that's in play. I won't go over the shorter time frames. You can certainly pick that, but now you know why it's in play. That's Novartis. Let's see. CPG. This is the energy sector. It's a smaller company. It's Canadian based. It's oil and gas, a few other things, some delivery. it's an interesting one. Low price stocks, so be careful. You can buy a lot of it, but you can also lose a lot of money on them when you buy a lot of small stocks. But let's just take a quick look at that. CPG. And Crescent Point Energy crossed up over. Energy is a sector in play. It's in an upward trend. But you can see this has basically gone sideways between 6.5 and 7.9. So we may just, as energy has had some ups and downs of the last week and a half, is it getting tired and old? I don't know. We certainly saw our sector play has changed. Keep pulling up the wrong one here. Backspace. And energy is on short term has dropped down. However, the 20-day is still the leading, but it has dropped down to materials and utilities. So keep that in mind. And this one, had some volume here. 15 million shares. Today was much lower at 5. So I got in here. 7.6 is my average, and I would put your stop right below the 15, which is 7.1, and this is worthwhile to get in as well. What was the other one? That was CPG. SNPS. I chose this because of its statistics, met our criteria. It's a higher price stock. They do software that are used for verification and semiconductor and other type software in other industries. So it's kind of a build/verification software. I thought with the NASDAQ getting a push today, and some of our traditional big ride, well-known names were not in our criteria, but this one was. I have a caveat on this. It's the 50 EMA is below the 200. I don't like that. I normally wouldn't trade that, but I thought this would be worth a buy. I averaged in at 306 today with my buys. S and PS. I'm not going to fool around with this. I've got to stop in there, but we've had a crossover. We had a lot of volume, and we certainly had a stretch above the 50 and then close above the 200. This is what I'm talking about right here. I'll just draw a circle. Is what I call the death cross. When the 50 crosses below the 200, that indicates lower lows to come. It's not a rule you can bet your house on, and it can take time to develop. So that is, I get nervous. Since it's a high price stock, you may not want to play with this one, but I would put a tight stop on this one I've got mine like at 285, I believe, but that's a 15-point swing if you got 10 shares. That's a big chunk of change, but you got to make those decisions, and we'll watch this. The other one was AD. I didn't have it. It hadn't met my criteria, but ILF, that's a Latin America fund, the 40 top funds. A lot of what's in that fund, it's like an index, is raw materials. So, and some commodities. A lot of raw materials and commodities come out of the Latin America area. So it has had a great run when everything was going south. And then it took a breather. The 10 EMA is just at the 15. It just crossed later today. It has a definitely upward trend. It's above the 50. It's above the 200. Everything is in a positive indicator. Even if this is a bounce, see if I can get this right. I'm just going to redraw it. Let's do a Fibonacci again. I don't put a lot of faith in this because you have to be a real good expert with this and know a lot more than just the retrace. Okay, but and I don't dig into it that much, but it can be very effective. It has a lot to do with volumes and what sector it's in. But with that said, if this bounced from this low, it's already up and above 0.5. The higher the bounce, the more effective the move is, right? If it only went to 0.23 or 0.38 and then pulled back, then you'd know we're in a, it's a quick downturn. But this is definitely worth a buy. It's kind of the horse is a little bit out of the barn. You might want to go in at 27 or 27 and a half. And I'm adding to mine every day. If I wake up tomorrow, it's down. It's going to open a few, a little bit lower. I'm going to keep adding to that. I have it. And that's it. I've had that position several times this year. Worked out pretty good. So that's another one. Let's see. Other sectors. Other in play. Centene Corp. It's a healthcare for government, commercial, and managed care. The 10 crossed above the 15, and it's in an upward trend. It's over the 50 and over the 200. CNC is the symbol. Would have recommended that today, but I'm not sure if the healthcare is going to stay in play. It's got my W formation that I like, and it broke above that midpoint a little bit, but it's been there before. And, it has, it has crossed over recently. So that's a good one, and its volume, it's 2 million, 2.5 million. It's not the biggest volume. What else do we have? Celanese. It's a chemical polymer used in industrial, medical, and auto. It's looked at it more for the industrial. When you think about agriculture, that's going to be under pressure. The fertilizer, chemicals that go into fertilizers, chemicals that go into food processing, etc. Is most likely, if commodities get tight and they rise, then all the other shadow industries that feed into it will rise. So that Celanese is really a shadow of that chemical industry and agriculture, but I liked it. Met our criteria, and one that is worth a look, and we'll keep track of that. Another reason, above the 50, above the 200, cross above, gapped up, there's some strength there, and certainly an upward trend. Like that one. Let's see. DBC Commodity Index seeks track. This is an interesting index. I was looking mostly for stuff for agricultural, right? This one tracks the change, plus or minus, of exchange-traded fund types in oil, crude, oil, natural gas, gold, silver, zinc, a whole bunch of materials and elements, corn, wheat, soybeans, and sugar. The latter part really I got some interest in. You can dig into the DBC, look it up on Yahoo or CNBC or Schwab, and it will tell you what percent of each of these they're in. 10 above the 15, again, it's been that way for some time. The gap has been narrowing. It's in a mega uptrend. I've had my eye on it for a little while, but I haven't brought it up because we've got other plays I thought were a little bit better. This one, since grains are going to be coming into, I want to keep an eye on it, and I think it's a good one to nibble at. But like I said, this has just been a mega. This is the daily chart again. It's just been a mega uptrend. What goes up must come down, but this has been a very steady state, right? So you've 1, 2, 3, 4. It's probably due for a little bit of a pullback. It's really been shadowing. See how it shadows here, the 15 to the 9, and the stock has been pretty much at it, except for a couple of down days here. So if you get in it, which I am, I would keep your stop, down there at 27. If you buy it at, 28, give yourself some room. Okay. But it meets our criteria. What else do we have? That was DBC. Oh, AVD, American Vanguard, Chemicals for Agriculture. I would have recommended this, but it's very low volume. I don't like low volume stocks because, if you get in them, sometimes it's hard to get out of them, right? Let's say, okay, I want to sell, but you've got to sell at a discount because, it might be the offer may be 10.5 and the person buying is down at 10. So you take a haircut on getting out if you want to get out in a hurry. So I tend to avoid that, but AVD, American Vanguard. So this is a play on, what did I say? chemicals for agriculture. Crossed above, very promising. Above the 50, above the 200, very promising. And, was a little bit of a W formation here and starting to break above it. It didn't make it today. Even if it goes sideways, I'm okay with that because look at here. It broke above and it had a nice run up and the gap was wide. Then it got narrower and then finally had a cross down and up, and then we're crossed up again. A lot of times when we get this play, especially after a heavy move up or down, you get this sideways and you sometimes stopped in, stopped out. Give yourself plenty of room. And, I would, this is definitely one to play. Okay. So what about our shorting? I've held on to my shorts. I only added to one today, and I'm doing the 1Xs. So the inverse of the Dow. Well, let me look at the Dow. Last week we saw, and I didn't get a report out, but we definitely had a situation where we're down at 33.9 for the relative strength index. That told us we were definitely oversold territory in for a bounce. Sure enough, we get a bounce today. Big one. It stopped. It got repelled by the 9, the 10 EMA. It should be able to make its way up to this trend line in the next couple of days. I think, typically on a holiday, shortened week, people have made their moves, got out of Dodge. I don't really worry. They may have some buys in, but I don't think anybody's really going to. These institutions are not in the mood to, make major changes. I don't think we're at a bottom. You heard a lot. Are we at capitulation? Capitulation, what does that mean? We have a couple of down days where everybody throws, like last week we saw, everything got sold. Volume is really high. There's nobody left to sell. And, at that point, you can go, buyers start coming in and nibbling. You look at the one way to tell, and we'll do this in the future. You look at the advance and decline chart. I like to make it a line. That's why advanced decline line, but anyways, it's a chart and it maps, and then it's almost like our oversold indicator. If you're down at the bottom, there's been a lot of selling, the volume was high, and then the market really just goes sideways for a little while. You might have some ups and downs. You look at the advanced decline. If that stays sideways and then all of a sudden you start seeing more advances than declines, like I think we're still over 73% of our New York Stock Exchange and below like they're below the 200 or they're just way below. So the advanced decline is really low right now. Anyways, with that said, I don't want to get in the weeds. It's not the time. This daily chart on Dog, I still have it. I added some today, actually. And then, my stop is down here. I'm giving it some room below the 14. What was really interesting here, what caught my eye today, that's why I bought some, is we've got this indicator of this is now, instead of it's not a death cross, it's the golden cross. The 50 goes above the 200, indicating higher highs to come. Our oversold indicator dropped down from, overbought was 65 to drop down to 56. Still a little early. If we go back to the diamonds, which is the long of the Dow, the Dog was the short of the Dow, was the relative strength index was down at overbought near 33.9, and now today it's at 41. So we're etching back up. But no, I'm not recommending going long in the Dow. SH, let's look at the SPY first. The SPY well-watched index, that again had a very low 35 for the relative strength index, indicating oversold, and now it's at 41, so it's climbing. We're almost ready to, we were repelled by the 10 EMA, but yet we had a huge increase today, very impressive. Should be able to get up to this, Twomey trend track line, should be around there if it gets up and above, but right now that's not a buy. The short of that, the index 1-to-1, is SH. That's shorting the SPY. I'm still in that. It's stopped at the 10 EMA. A lot of selling today still, and our relative strength index was a high of 63, came down now to 457. And remember, the last time we had a relative strength index, it was up at 67.9. We had 3 or 4 days of downdraft. So most likely we'll have a downdraft for a couple more days. I'm hanging in there for now. The other one is QQQ, same story. That didn't even make it to the 9 EMA, to the 10 EMA today. Relative strength index is popped up to 39. It was oversold. PSQ is the short of that, and let's see, that has not even reached its 10 EMA. It was selling today. It was a down day for the short, but and the relative strength index on that is now 59, where it was over here a couple of days at 54. So it's hanging in there, and it's I'm still short. The small caps, pretty much the same thing. So what does that all mean? The market index is I'm still short. I'm going to stay short. The market was oversold to some degree. The relative strength index. I didn't get a market report out at the end of last week, but I was going to mention that. Be prepared for a bounce. That's why I got the buys out today. So you want to hit like and subscribe so that you get alerts. Are we in a bounce? Yeah. How much of a bounce? I don't know. We're going to see. I'm not ready to flip my position yet because our indicator will keep us in the trade a little bit longer. You don't buy at the bottom, so you don't sell at the tops. So we're going to, live this pain a little bit. It alleviates that reactive trading, which we want to get rid of. Add to our short positions. I would recommend that. I would wait a couple of days, see where this goes. I don't think this week we'll have a big downturn, but who knows? I mean, I'm not in the prediction business. I'm going to let the technicals tell me, and I'm going to let basically the fundamentals of companies tell me, right? Fundamentally, I want to look at companies that are improving and that they've got a good healthy P&E or, low, and that their, sales look good and their prognosis is good going forward. Not like Target and Walmart and alike. What else? Oh, another one, if you hadn't bought it yet, Verizon is just at, it's hard to see here, but I would say that it's the 10 and the 15 EMA are equal, if you will. So the 10 hasn't quite crossed over yet. One's 49, one's 49.01. It is 1, 2, or it's probably going to pull back a little bit here. We're above 0.382. We haven't quite got to 0.5. And it looks like it's going to stay pretty healthy. So that's one you want to look at. UNH was the other one we had. UNH, most likely, it blew above our track line. It hit the 200 EMA. I didn't get it. I thought I had my buy there, but I don't have a buy. So this is moving up, but our 10 and 15 EMA is not close. Yeah, could have bought it to 200 and made some points. I'm not ready yet. And I've got other healthcare sectors involved that I a little more positive track-wise, but it's a good, healthy company. I had a buy-in for Tesla, and it went off Thursday or Friday. I had a buy-in at 643 because support was down here, 645, 646. The next level of support was at 620. I believe I have a buy-in there around there as well. It kind of shocked me. I forgot I had it there. I immediately put it in the stop. I'm not recommending to buy here yet either, but I just wanted to bring it up. So there's today's stock market report, Monday, the 23rd of May. I'm James Twomey. Hit the like button. Hit the subscribe so you get those stock alerts. And also, too, you want to refer this to your friends. This is the basement tapes version. What do I mean by that? We are really talking about stocks around the kitchen table. Not a lot of whiz bang, not a lot of video, not a lot of horns blowing, not a lot of, hey, I predicted the last downturn 15 years ago. My track history is, there's perma bears out there that come out. There's perma bulls that come out. We're at that point in time. There's a lot of, I'll just say it bluntly, garbage out there. I've bought a lot of subscriptions. I've bought a lot of software. I've bought a lot of different systems and followed several people. When it comes down to it, it's fundamentals of the company and how well they're doing. It's technicals to help you to stay in or out of the game. It's the macro trends, obviously. And, I had one guy say to me, well, obviously, dummy, the trend has been down. Yeah, but, I was shorting and selling in January and February. So I'm not trying to defend myself. I said, obviously we know the trend's down, but there's many people who are just starting to sell now and they feel like they're at the bottom. We're not at the bottom. There's plenty of time. So lighten up as the market goes up on any longs. Look at adding or continuing with your shorts. And we'll continue to recommend some of these stocks, and some of them maybe just for a bounce. TBT, for example, it's still hovering down around the 14 and 15 and 10 EMA. The 10 is 25.7, and today it closed at 25.77. So, I add if every day it's down, I keep adding, but it's going sideways. But where it hasn't had the inflection, so I'm in the trade. TBF, that's the two-timer, TBF. Same situation. And, if it rebounds, great. This may be just a breather, or it may go sideways. But, we're in the play. And the other one, which I thought was of interest, was UNG. And that one, I've told you in previous segments, this is the daily chart again. But look at it. It's starting to... There's no reason natural gas should be expensive in the summer. Not, maybe to get air conditioning, but... it's really the northern climate uses quite a bit of it for heat. And the people will buy the futures, because this is usually a month ahead is this predicting for the United States natural gas. But here it continues. Again, we're staying in due to the deflection has not occurred between the 10 and the 15. You can look at previous segments I sold when we had these major drops. Anything in energy moves rapidly. You can wake up and it's 10% down. And the next day it can be 10% up. XLE is a basket. It's an index. It's a basket of from oil and refineries to service providers to the actual commodity itself. You can look inside of that on your CNBC, Schwab, or Yahoo to go into what the holdings are. I've been in and out of this. It inflected here. I bought it. I got stopped out here. I got a small position left, and it's taken off again. So that's energy. Even though it has dropped in our short term 5-day, it's now in 4th place. It's still overall over 6 months our top leading dog. All right. So there goes the stock market analysis along with the Twomey stock market report. Please stay tuned for future. Look back in the others for more of the beginners courses on how I derive these indicators that we use. Hit the like and subscribe button. I've got an email on the YouTube. Email me if you have questions about stocks or if you're looking for entry points or exit points on things that you're already in. And we certainly will be any subjects that you would like to be covered. All right. Thank you so much. Have a great day. James Twomey. This is the Twomey Stock Market Report. Have a great day.